Hey traders, and welcome to another episode of Smart Risk. Today we're diving deep into one of the specific cornerstone trading plans of smart money concepts, using the powerful tool of change of character. For many traders, setting up trades based on the change of character can be a challenge, putting their trades at risk simply because they might not be familiar with the key points and tips we are about to share in this episode. In this episode, we not only share essential tips, but also reveal precisely how and where to enter and exit a change of character trade with an optimized strategy. So traders, if that's something you're interested in, please give this video a thumbs up to show your support, and subscribe to our channel if you are new. See you after intro. Welcome back, traders. So, let's get started. As you know, smart money concepts classify entry methods into two major categories: reversal and continuation entry methods. The reversal entry includes the change of character and flips entry methods. We have thoroughly covered all the criteria and rules needed to identify a valid change of character in the market in the previous episodes. I highly recommend going through our channel and watching them, as they provide valuable insights into understanding changes of character. Now in this episode, we're putting all that knowledge together. We'll understand how to leverage these concepts to our advantage and establish a trading plan based on the change of character. This approach carries a higher win rate ratio with precise entry and exit points. Now, let's delve into the basic instructions that should be considered to properly implement the change of character in our trading strategy. Firstly, we should conduct market structure mapping on the 4-hour time frame and highlight unmitigated areas of interest, and wait for price to tap into the 4-hour time frame's demand or supply zone. In the second step, we shift to the 15-minute time frame to gain a clearer perspective on the price action and search for any signs of a change of character in market behavior. If the price forms a 15-minute time frame change of character pattern, we proceed to the third step by zooming into the 1-minute time frame, searching for any signs of a change of character. After fulfilling all the mentioned criteria, we should now proceed to the last step, setting up an entry on the 1-minute time frame. Now that we have a general outline of the core steps involved in the change of character trading strategy, let's delve into the details of each step, starting with the first one. Imagine we have a 4-hour structure like this one on the screen. Price is in a downtrend and also has created a series of bearish BOSs. So here we have an unmitigated supply zone at the extreme. Let's say that we have a perfect sell setup on the 4-hour time frame, which is confirmed by the criteria and rules of a high-probability trading setup. Our next step is to switch to 15-minute time frame, closely monitor the price movement, and patiently wait for the price to return to the 4-hour time frame supply zone and form a change of character pattern. After detecting the confirmation for market structure shift in the 15-minute time frame, to apply our trading plan, we need to follow a few steps. First, we should identify and highlight the supply zone generated by the change of character's bearish wave in the 15-minute time frame. Then, we need to zoom into the 1-minute time frame and patiently wait for the price to tap into the identified 15-minute time frame supply zone to get reversed from it and create a change of character on the 1-minute time frame. Once the change of character is confirmed in the 1-minute time frame, our next course of action is to identify the order block generated by CHOCH's wave in the 1-minute time frame. Subsequently, we place a sell limit order at the lowest point of the zone, with a stop loss set a few pips above the highest point of the zone. As for the take profit, we have the option to target the unmitigated demand zone on the higher time frame like 15 minutes or 1 hour, or the swing low of the current time frame. These steps will help us execute an entry with a well-defined risk-reward ratio. If you miss the change of character, or if the price action doesn't provide an opportunity to enter the market by being extra volatile, or even price is drastically pushed away without activating your order, then taking the continuation trade becomes the easiest and safest way to execute trades and entering into the market. So here, let's say you somehow missed this entry opportunity during the change of character, or you simply want to open additional positions. The price, after the mitigation of the supply zone, it reversed and shifted its character to the downside by breaking and closing below these structures and breaking through several demand zones. If you couldn't execute any short positions from the change of character's supply zone, in such a scenario, the recommended approach is to use SMC's continuation strategy to enter the market. To achieve this, the price needs to break the recent structure to the downside and pass through these 1-minute demand zones, creating a newly generated supply zone. In this case, I wouldn't recommend placing any limit order at this newly generated supply zone due to potential risk. There's still a high probability that the price could use this supply zone as an inducement to generate more liquidity. Therefore, it's advisable to wait for the price to form liquidity zones and already sweep them before tapping into our newly recognized supply zone. What we're looking for here is a pullback after breaking the recent structure and forming a liquidity zone, such as double bottoms, triple bottoms, or trendline liquidity below the new supply zone. It doesn't matter whether the price pushes to the downside and creates a new break of structure, or remains choppy for a while. After the creation of the liquidity zones below the supply zone, we can now set a limit order in the lowest point of the supply zone. This is because we have a very strong confirmation factor if the price sweeps the liquidity zones that form below the supply zone before tapping into it. There are 4 essential criteria that must be considered before executing such continuation trades. The first rule requires the price to form a change of character pattern or flip pattern after reaching the higher time frame supply or demand zone. Secondly, we must patiently await a break of structure and a zone breakout in the price movement. The third rule emphasizes that the price should have left inefficiency behind when forming a break of structure. The last and most crucial rule is the presence of static liquidity zones near our identified point of interest. In summary, to have an opportunity to execute continuation trades, it's essential that all of these rules and criteria are met, and there are no exceptions. Here, all the mentioned criteria are met. Next, we place our sell limit order at the lowest point of the supply zone, with the stop loss a few pips above the highest point of the area. For the take profit, we have the option to target the unmitigated demand zone on the higher time frame like 15 minutes or 1 hour, or the swing low of the current time frame. In the following, we can see that the price once again has created a new break of structure and has already broken through the next demand zone, leaving inefficiency behind. Thus, we have another unmitigated supply zone on the 1-minute time frame. Additionally, we can see that the price formed a bearish trendline liquidity below our newly identified supply zone. In this scenario, the price will likely push back up to clear the liquidity above the trendline, triggering the stop losses of retail traders. It aims to fill the inefficiency left behind and then tap into the supply zone situated at the extreme. With all the criteria of the continuation entry model met, we can now place our sell limit order at the highest point of the order block and set the 15-minute time frame swing low as our take profit target. To execute multiple trades simultaneously, some certain points and rules must be considered to reduce risk exposure. Limit the number of open positions to a maximum of 3 at the same time. Always remember that the position size you risk for the first entry should be halved for the next upcoming trades. For example, if your first position size is 2 lots, it's advisable to risk half that amount, which is 1 lot, for the subsequent trades. Now let's proceed to the real chart and see trade examples. Here, we have the Euro-Dollar 4-hour time frame on the screen. The market's overall direction is bullish. We see that the price, after sweeping the sell-side liquidity accumulated below the equal lows, and then drastically pushed to the upside. It has broken through the latest major high and also created a bullish break of structure with great inefficiency. Continuing, we see that the price subsides its bullish momentum, and after a temporary pause, reverses its direction to the downside. We see that the price has taken out the inducement level by breaking below this candle's low, which represents the most recent internal pullback that the price formed on its upward path. Since the inducement has been taken out, that confirms these low and high as valid major structures, and subsequently, we have a valid break of structure right here. Now, since we have a valid bullish break of structure, we are now allowed to identify an order block or demand zone attributed to the recent valid BOS. As we can see in the following, the price has retraced back down, entered a pullback phase, filled the inefficiency left behind, and reached our identified demand zone. Here, we anticipate the price to react and get reversed. Since the price has tapped into the 4-hour time frame, our next step is to zoom into the lower time frame In this case, the 15-minute time frame. This allows us to gain a clearer view of the price action and search for any signs of a change of character pattern in market behavior. On the 15-minute time frame, we see that the price was in a downtrend until it reached the 4-hour time frame's demand zone. After reaching this zone, the price reversed, moved to the upside, broke the two successive structures, and left a great inefficiency behind. So, a crucial question arises. Does this change of character provide a high probability, or does it carry a high chance of winning if we use it to execute trades? We have fully discussed the rules and criteria that need to be considered to identify a high-quality change of character in previous episodes. As you know, guys, a change of character is valid only under one condition: price reverse and originates from a higher time frame supply or demand zone before breaking the recent major structure and initiating the change of character. So here we see that price has done that. Secondly, for having a high-quality change of character which provides a high probability in the market, price must sweep static liquidity zones before tapping into the identified supply or demand zone. Here we can see that price has swept the liquidity below these equal lows and then continued to its bearish movement. The third criteria for a change of character pattern to be more effective with a higher chance of success is that the price should break and close below or above the two successive structures or zones along its path. Once again, we see that price has broken out two successive structures after mitigation of the 4-hour time frame's demand zone. So guys, all the criteria needed to confirm a change of character as an effective one have been met here. Following the formation of the change of character pattern, in the next step, we identify and highlight the demand zone generated by the change of character's bullish wave on the 15-minute time frame. Next, we need to zoom into the 1-minute time frame and patiently wait for the price to tap into the identified 15-minute time frame's demand zone, triggering a reversal and creating a new change of character on the 1-minute time frame. Here we have the 1-minute time frame on the screen. We see that the price was in a downtrend and had created a series of BOSs until it reached the 15-minute time frame's demand zone. After tapping into the demand zone, the price reversed its direction, subsided its bearish momentum, and then started to push upside with inefficiency. It created a change of character by breaking and closing above the most recent structure. Once the change of character is confirmed in the 1-minute time frame, our next course of action is to identify the order block generated by CHOCH's wave in the 1-minute time frame. Subsequently, we place a buy limit order at the highest point of the zone, with a stop loss set a few pips below the lowest point of the area. As for the take profit, we set our target at the swing high of the current time frame. Now that we have placed our buy limit order, let's see how the market reacts and see if our trade setup plays out successfully. As you can see in the following, the price pushed to the downside, after mitigating our point of interest and also activating the buy limit order, reversed its direction, and moved upward. Now, let's consider a scenario where we missed the change of character entry, or we want to execute additional trades. As the price has shown a market structure shift, we are now looking to utilize the SMC Continuation entry model to execute trades. Now, let's see what happens with the price action. As you can see, after mitigating the change of character's demand zone, the price rapidly pushed to the upside with significant inefficiency, creating two successive bullish break of structures. Additionally, the price broke out of this 1-minute time frame supply zone. Next, we identify the demand zone associated with the recent bullish wave. Also, price formed equal lows above this new demand zone, which is generated by the bullish break of structure. As we mentioned before, to execute a trade based on the SMC Continuation entry model, there are 4 essential criteria to consider. The first rule is that the price must form a change of character, and as you can see here, the price has done that. The next criteria is that the price must break structures and also break through supplies or demand zones, and yes, we can see it on the chart. The third rule emphasizes that the price should have left inefficiency behind when forming a break of structure. It's clear that we have it here. The fourth and last rule is that the price must form liquidity zones near the identified point of interest, which has already been met here. Now that all criteria have been met, we can go ahead and place a buy limit order at our identified point of interest, with the stop loss a few pips below our zone, and also with the half size of the order that I executed earlier from the change of character's demand zone, and for the take profit, I am going to target the swing high. Now that we have placed our buy limit order, let's see how the market reacts and see if our trade setup plays out successfully. As you can see in the following, the price pushed to the downside, swept the liquidity accumulated below double bottoms, and after mitigating our point of interest and also activating the buy limit order, reversed its direction and moved upward. Now, we can see that the price has created another bullish break of structure with inefficiency. It broke through these supply zones. Next, we identify the demand zone associated with the recent bullish wave. We can already identify a bullish dynamic trend line just above our point of interest, creating a substantial liquidity pool waiting to be swept. Once again, if all the criteria are met and we are allowed to execute another long position, there are additional rules to consider. Avoid executing more than 3 trades at the same time. For the second and third orders, it's advisable to use half the size of the first position that was executed earlier. Now, in the next step, I'm going to place a buy limit order at the highest point of this order block, and for the take profit, I am aiming the swing high. Now, we must monitor the market closely and let the trade unfold according to our analysis. Our buy order has been activated, and we are officially in the market. As anticipated, the price moved upside after the activation of our last buy limit order. Eventually, all of the 3 trades hit the take profit target. That's it, traders. Thank you for watching this video. I hope you found it informative and useful. Don't forget to hit the subscribe button and turn on notifications to stay updated on our latest videos. We value your feedback and suggestions, so please leave your comments below and let us know what topics you'd like us to cover in our future videos. We appreciate your support and look forward to seeing you in the next episode.